in South Africa, annual producer price inflation for final manufactured goods jumped 7.8% in September 2021 from 7.2% in August, and this is the highest level since February 2016. This is part of a general trend we're seeing across sub-Saharan Africa with rising inflation. Well, I'll be discussing this with Matt Kindiga, Associate Practice Lead, Sub-Saharan Africa at Frontier View. Great to have you on the program, Matt.
Hi, thanks for having me today.
All right, so what do you think has been causing the rise in inflation across Africa?
Well, it's worth noting that it's quite significant that inflation has risen over the last couple of months. Only 6 to 12 months ago, inflation rates had fallen to multi-year lows in countries like South Africa, as well as other countries like Ghana and Kenya. So this was quite a significant shift compared to what we had seen. And this recent rise in inflation and inflationary pressure is a bit concerning. So certainly it's being driven by both a combination of domestic and global factors. In most countries, it's a result of global factors, such as high shipping costs. So global shipping costs are roughly 10 times what they were before the pandemic. We've seen a rise in global oil prices, which is starting to feed into higher domestic fuel prices, especially in countries with not fixed fuel prices such as Kenya and South Africa. And we're also seeing elevated commodity prices for agricultural commodities. So this is a bit of a double-edged sword for countries in Africa because they benefit from higher agriculture exports, but they are seeing a significant increase in food prices. So certainly it is contributing to higher inflation. There's also the effect of currency volatility and currency shortages in countries like Ethiopia, Angola, and Nigeria. So that is also contributing to inflationary pressures across the region.
Right, and what's your outlook, and how do you expect central banks to, respond to this issue?
Certainly. So here at Frontier View, we have actually revised up our inflation forecasts for every market that we cover in sub-Saharan Africa. And in countries with already high inflation, such as Angola, Ethiopia, Nigeria, Zambia, we expect them to continue to experience double-digit inflation well into 2022. In markets where inflation is very low, such as South Africa, Kenya, and Ghana to an extent, we are expecting inflation to rise gradually, but we don't necessarily expect double-digit inflation in 2022. In terms of how central banks will respond to this environment, it really differs from market to market. So in markets where we have relatively low inflation at the moment and interest rates are quite low as well, we do expect there to be some scope for, say, the South African Reserve Bank, the central banks in Ghana and Kenya to raise interest rates, especially if economic recoveries continue as we're currently seeing. But we are likely to see less hawkish stances when it comes to interest rate decisions in central banks in Nigeria, Ethiopia, Angola. And this is because central banks will have a much more difficult time balancing the different competing aims of stimulating their economies, ensuring that economic recoveries continue, but also trying to keep inflation low. So we don't necessarily think interest rates will rise uniformly across the region.
I guess that's the problems the central banks have to deal with at this point. But also businesses have a problem here. How should they respond to a higher inflation environment?
This is quite a tricky question because I think most businesses were expecting the overall demand environment, operating environment to be better as we move away from the direct impacts of the COVID pandemic. So most businesses we were speaking to were assuming that inflation rates would be a bit softer going forwards, but this certainly won't be the case. So businesses face an unexpected squeeze to their margins over the next year as a result of higher inflation. What we are seeing is that the multinational companies that we advise, that we speak to here at Frontier View, are taking a multifaceted approach. So some companies are looking at their product portfolios to determine whether they can offer more affordable products to their customers, or thinking about changing the product sizes or introducing new products. to make sure that their products remain competitive and affordable and attractive. We're also seeing a really big push on reducing shipping and logistics costs. So thinking about how companies can use their logistics capacities more efficiently to ensure that their cost base remains relatively low. And finally, companies are also very interestingly considering increasing the frequency of their pricing cycles. So whereas companies were previously reviewing their prices once every 6 months or 12 months, we're now seeing this change to between 3 and 6 months on average. So certainly there are a number of things that companies can do to respond to this environment over the next year.
All right, Matt. Always great to talk to you. Thank you so much for your time on the program.
My pleasure.